No one has planned for this. Even though it was very obvious that the end game was in sight, nobody actually planned for it, which of course would be evidentially so. You know, it wouldn't be catastrophic if people were planning for it. So how can you have a catastrophic end game without having everybody not plan for it?
Today we have Max Keiser discussing the looming economic crisis that has been building now for years and believes that we're now months away from a catastrophic event. The collapse we're seeing of many countries' fiat money systems indicates that the situation is extremely dire. The recent inflation numbers are also a signal of these systems' instability and is surging as we speak. Keiser emphasizes that the repercussions are tangible, impacting people's ability to afford housing, food, and energy. He points out that not only is the economy spiraling out of control, the interest on US debt has now surpassed even the military's budget. He criticizes the failed promises of economic growth through trickle-down economics, and says that we instead watched an abundance of money printing and misallocated investments, contributing to capital disappearance. This pattern, involving trillions of dollars, has fed into an elusive financial void controlled by major accounting firms. Keiser predicts a transition to a Bitcoin standard, accelerated by waves of bank failures. He says hundreds of banks are insolvent and sustained by dubious accounting methods, which will be put on display as we start seeing more banking collapses in the months ahead. Let's get right into the latest interview with Max Keiser, as he gives his market prediction and what we can expect in 2025.
For years, the central banks were bailing out Wall Street by taking on all their bad debts. They would make these ridiculous bets, like a subprime bet or some other derivatives bet. They would go bad, and they'd all pay themselves, and they'd get great bonuses. And then to get that garbage off their books of Goldman Sachs and JP Morgan or Credit Suisse or BNP Bank, you know, the central banks would take it from them and swap it for fresh treasury bills. And the idea was that eventually this wouldn't work anymore. We'd have to bail out the central banks themselves, and we'd create a global lending facility, $100 trillion lending facility. Maybe we'll do an IMF special drawing right. We'll just float this, we'll extend and pretend. But now, you know, there's a war going on. So that strategy was short-sighted because it would only work if there was total globalization and total dollarization. But now that we're in deglobalization and de-dollarization, that end game of floating all the bad central bank debt to a mega central bank. I mean, they will try it with central bank digital currencies, and there's another chapter to come here. But the Bank of England clearly, after 300 years, has now have to declare bankruptcy, as we knew that it would, because the economy was just skating on fumes that they kept in the basement at a chateau somewhere in Switzerland and claimed that that had collateral value. Well, guess what? It doesn't. Right. The Druids, as I like to refer to the people who live in the Great Britain area, are going to be plunged back into medieval darkness from whence they came. And ironically and hysterically and quite comically, Northern Ireland will be spared because they're part of, wait for it, the EU. So the Brexit, as again I predicted, would lead to total economic calamity. And I didn't, however, think it would result in total plunging into darkness. The thing about the British institutions that are collapsing is that they had a really good run, many hundreds of years. So you have Westminster, or the political class with Parliament, and you have the monarchy over there at Buckingham Palace. And both of these institutions, you have the monarchy, of course, was a kind of the beginning of a tabloidization of that institution and made it into, as some people will tell me, look, the king is our Mickey Mouse. They're just tourist attractions. They're not to be taken seriously in any way. So there's no institutional integrity there. Now Westminster and the Bank of England are going to fall because they've been resting on their laurels for hundreds of years. If you live there, and this is the thing about it, is that they put up a good front. You go there, and there's the Big Ben, and it's sounding dong, dong, and there's the Thames, and there's Parliament, and you're like, wow, this is solid. This is institutionally solid. But then when you go behind the wall and into these organizations, you find that spies are losing the codes to secret codes all the time. You've got spies inside MI6 selling state secrets for a gin and tonic down at the Groucho Club. So it's just like becoming completely dysfunctional mess. And the time from that it would just collapse utterly It was hard to predict the exact day. It seemed like it was happening imminently, and now it's gone. The Bank of England, this is the reason why, as Ben Franklin said in 1776 era, the primary reason there was a war of independence in the colonies to separate from those scallywags across the ocean was to escape the Bank of England.
Well, the bubonic plague in this situation of this dark ages is the U.S. Treasury market. And you talk about deglobalization and de-dollarization. Every time we've had a Thucydides trap in the past, I think there's been 18 of them. So this time it's the deglobalization and de-dollarization happening. Deglobalization happens at the end of every empire. It's happening again. And here you see is like, they're planning for this.
Keiser goes on to say that because of massive insolvency, central banks and the Federal Reserve are now over-leveraged. The Bank of Japan, historically central to global currency dynamics, is on the brink of default, which could precipitate a global economic downturn. Max foresees a looming economic catastrophe driven by collapsing fiat money systems, rampant inflation, and bank failures. He suggests that a transition to a Bitcoin standard might be on the horizon as the world grapples with the impending crisis.
There's no plan in place by the institutions to rescue their system. They're abandoning ship. These are the captains of the institutions abandoning ship.
Right. Well, this is the problem of having a monarchy and an aristocracy in place, is that when times get tough, as they're getting now, the monarchs and the aristocrats are going to jump ship. Right. This is a rearguard action. This is their chief sanctions officer is trying to burn the bridges as they're running away, essentially. And this is what the aristocracy and the monarchy plan to do in Britain and what's left of the aristocrat in continental Europe as well. We don't have an aristocratic class in the United States. We have an oligarchy class, and they'll be on their 300-foot yachts over there in Bimini or somewhere sipping Mai Tais with Jeff Bezos. But in Europe, it's a long-established tradition to simply, get your gold on the horses and start running away.
Yes, you're going to see that. That's what's happening there. In my opinion, that's what we see. If the U.S. Treasury is the one, they're the ones blowing up their role as the settlements.
I'll tell you what, is dirt cheap right now in England are these old castles.
Mm-hmm.
You can probably buy them for 5 cents on the dollar. But they're about to become very valuable real estate as the aristocrats and BBC presenters barricade themselves in these old castles with some, grenade launchers and old reruns of Jimmy Savile. That's what they'll spend the rest of their life looking at.
Max is still bitter that his family was kicked
out.
They
took my castle away in Ireland.
No,
Caverloch.
It's in Scotland.
Yeah, Caverloch Castle in Scotland, the lowlands. George Galloway promised he'd get it back for me. I'm still waiting, George. No one has planned for this. Even though it was very obvious that the end game was in sight, nobody actually planned for it, which of course would be evidentially so. It wouldn't be catastrophic if people were planning for it. So how can you have a catastrophic end game without having everybody not plan for it?
He asserts that the promises made by the Federal Reserve and central banks have been hollow, leading to excessive money printing and a proliferation of poor investments. And with the aftermath of the recent inflation surge, Keiser says this will not lead to a return to the status quo. He argues that the economy has spun out of control, with the US facing a mounting debt crisis. Keiser presents two bleak possibilities: hyperinflation or a deflationary depression. In either scenario, the overall quality of life deteriorates. He notes the absence of viable solutions, indicating an even greater severity of the crisis. Interestingly, he points out how political figures are discussing Bitcoin as part of a potential solution, marking a shift towards a Bitcoin-centric financial framework. Keiser challenges the conventional macroeconomic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures, which are selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Keiser also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future.
Giant firms on Wall Street, as well as institutional investors with billions of dollars, are making big moves in crypto, based on fear and uncertainty. He believes that the agenda of some of these buyers may not exactly be what people think, and to prepare for a major market fluctuation very soon.
What do you think about the latest interview with Max Keiser? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.